Hello, everyone, and welcome to today's edition of Crypto Talks. I'm your host, Alex Tapscott, Managing Director of Digital Assets at Ninepoint Partners. Over 1,200 people registered for today's events from all over the world. So for those of you who are new to Crypto Talks and to Ninepoint, welcome. Ninepoint Partners is a leading independent investment firm with over $6.5 billion in assets under management and institutional contracts. We pride ourselves on our innovative approach and investment strategies that are uncorrelated to traditional assets. And it's within that framework that digital assets, and Bitcoin in particular, are a key focus area. If you'd like to learn more about our approach to digital assets, please visit our website, digital.ninepoint.com. Crypto Talks is a conversation series with some of the leading figures in the blockchain and crypto asset industry. On the last edition, we were joined by Cameron and Tyler Winklevoss, founders of Gemini LLC. If you missed that one live, please check it out on our website. Blockchain, as we've said before, is one of the most important innovations in computer science. It represents nothing short of the second era of the internet. You see, the first era of the internet was the internet of information. The second era of the internet, powered by blockchain, is the internet of value, a new platform that allows us to move, store, and manage assets from dollars to votes, art to stocks, digitally, seamlessly, and peer-to-peer, really for the first time ever. The first era of the internet upended information industries like publishing, media, photography, and the like. The second era could make those disruptions seem quaint. Financial services, the very lifeblood of our economy, and money itself are being reimagined. Bitcoin was the first example of blockchain in action, and it remains the largest and most important digital asset today. But in part because of its success, other major stakeholders, large technology and financial firms, and even governments are getting in on the action. We now have corporate currency initiatives, a new thing called stablecoins, which have exploded in value, and central bank digital currencies too. One thing is for sure, the world of money and financial services as we know it will be unrecognizable by the end of the decade. So it's with that as the context and the backdrop for this discussion that I'm very excited to introduce a longtime friend and collaborator and one of the financial industry's most important voices, Chris Giancarlo. So the Honorable J. Christopher Giancarlo served as the 13th chairman of the U.S. Commodities Futures Trading Commission, or CFTC. Chris also served as a member of the U.S. Financial Stability Oversight Committee, the President's Working Group on Financial Markets, and the Executive Board of the International Organization of Securities Commissions. Chris is a senior counsel to the international law firm Wilkie Farr and Gallagher. He is also a co-founder of the Digital Dollar Project, something we'll be discussing quite a bit today, a not-for-profit initiative to advance exploration of a U.S. central bank digital currency. Named as one of the most influential individuals in financial regulation, Chris is a renowned blockchain technology advocate, a top crypto lawyer by the American Crypto Association, and a key contributor to the global discourse on digital assets. He founded and was co-editor-in-chief of e-Securities, Trading and Regulation on the Internet. He received his JD from Vanderbilt University School of Law and a BA Phi Beta Kappa from Skidmore College. You can see him on Twitter at Giancarlo, Giancarlo, MKTS. And he is known affectionately in the industry as Crypto Dad. Now, Chris, you know that I already have a crypto dad. So I like to think of you more fondly as my crypto uncle. But this nickname is something that Chris earned for his guidance and really adult supervision in a young industry, something that was so critical in its early days to its success. So let's jump right into it. You embraced blockchain and crypto assets before a lot of folks in the private sector and especially in government really knew what it was. What was it that drew you to this space early on?
Thanks, Alex. Yeah, you're right. It was in 2015 that I actually called on the U.S. Congress to take a do no harm approach to blockchain development, distributed ledger technology, and a lot of the antecedent services and technologies that flow from it. I was hearkening back to the very benign approach to the first phase of the Internet of Information that you called, when the U.S. Congress, working with the Clinton administration, approached the early Internet with a do no harm approach. And as we go into what you call the second phase, the Internet of Value, I very much agree that it's critically important for regulators to take a do no harm approach to this very formidable technology innovation that I fully agree with you is going to do to money and indeed financial services what earlier phases of the Internet did to the information industry, the music industry, the entertainment industry, the transportation industry, so many, the retail industry, so many venerable analog formed industries that were revolutionized by the Internet. To think that this next phase of the Internet won't do to money and financial services what it did to those other industries is just naive. And I think people that, and my role has been to try to make people anticipate this and look ahead to this, because you can't stop technology. You have a choice. You can hide from it and be overwhelmed by it, or you can try to harness it and see what good it can do. And I really think that's what we need to do, is harness this technology, not try to hide from it and let it blow us down.
One of the ways in which the technology is being harnessed, obviously, is in changing how money works. Now, Bitcoin was the first example of this, but we've seen some other really interesting initiatives. One of them, which has gained a lot of attention recently, in fact, it was the cover story of The Economist last week, was central bank digital currencies. So I think everyone kind of understands how this works. You've got a central bank. It is the issuer of the currency. It controls the monetary policy, the money supply, interest rates, and so on and so forth. And these central banks, these venerable old institutions, are looking at digitizing their money. So what exactly does that mean? We use computers and mobile devices to move money, Canadian dollars, US dollars, in and out of our account, what have you. We use credit cards. We use computers to check our balances. So how is a central bank digital currency different than these, electronic tools that we use to access financial services?
Well, let's start first with a mental construct, and that is money has always been as much a social construct as it's been a government construct. We tend to think of money as something that is only purveyed by the official sector, by governments, by central banks. But if you look at human history, money has been as much of a social development as it is a government development. Societies adopt money. They bring the trust that's necessary for money to work with it. Without that social trust, all the government efforts in the world won't work. So I start from the premise that money has been as much a social construct as a government construct. And since the last financial crisis, since the Satoshi white paper, society has been actively experimenting with money way ahead of the official sector. Governments are actually relatively slow to awaken to what society has been doing here. Society has been asking the question for 10 years now, if I can send a photograph at the swipe of a keyboard around the world, if I can send an MP3 file without having to go through some music company to somebody in the world, if I can send a clip of a video somewhere in the world in a second, why is it that I need to wait 3 days to move my money and go through a series of intermediaries? And so society has been asking this question because they have that convenience by virtue of the first wave of the Internet. And they're asking, won't the second wave of the Internet do the same thing for money? And it will. And so the official sector has been awakening to this. It began first with the official sector asking, well, if this is going to be by private entities, who's going to have all that data of this commercial transactions? And that really drove China in a lot of ways to ask the question about WeChat Pay and AliChat and the amount of data that would be into private hands. And being a state-run society, a state-run economy, a state-run political entity, China said if anybody's going to have that data, it's going to be the state. But it wasn't just a non-democracy like China asked the question, because in many ways Europe and the United States asked the same question. when Facebook launched its Libra initiative, and the same question was, who's going to own the commercial data that comes out of commercial transactions? But that's only one, I think, 6 imperatives why the official sectors around the world, as you know, Alex, over 80% of the world's major central banks are now looking carefully at central bank digital currency. And economic data capture is only one of the reasons why. Other reasons are wholesale market infrastructure. Certainly, island economies like Singapore are asking how can they get an edge on the competition by modernizing their wholesale financial infrastructure, by reducing latency, reducing costs in wholesale transactions. And then, of course, there's financial inclusion. The Bahamas are experimenting with something they call the sand dollar, because they realize they have many citizens on outlying islands with no access to banking services, but with mobile connectivity, and asking the question whether a central bank digital currency may be an on-ramp into financial inclusion. And then there's the issue of benefits distribution or monetary policy expression with greater precision. And certainly we here in the United States learned last year during the COVID crisis that relying on people having access to banks and checking accounts to be able to deposit cash paper checks was a very inefficient way to get money in the hands of those who at the bottom of the economic food chain might not have access to banking accounts, but really need that benefit of that cash distribution. And then there's the issue of geopolitical expression of power. And certainly a lot of people are asking the question, if China has an edge in the development of digital currency, does that also give them an edge on bringing the yuan into a full reserve currency status, or does it diminish the dollar's status as a reserve currency? And then lastly, I point to what I think is the 6th most important imperative, and that is leadership in the standard setting of central bank digital currency. You know, the United States played a leading role in the first wave of the internet and brought to it democratic values of the rule of law, of privacy rights, of economic freedom and free enterprise. And those values are very important. You know, money carries with it social values. And I think one of the reasons the dollar has enjoyed reserve currency status is because the values of the rule of law, of markets that are free of government direction and control, of free enterprise and of economic privacy. And other non-democracies will bring very different values to money, values of economic surveillance, of social credit score systems. And so I think it's critically important that the U.S. play a leadership role in central bank digital currency in order to bring democratic values to it. Now, what do we mean by central bank digital currency? And let me take a moment. You know, sure. The existing system, the accounts-based system, is the dominant system over fiat money used in the world. When we have money in the bank, we may think about it as the same money as fiat money, the paper and coin dollars or loonies. But the fact of the matter is, those carry the full faith and credit of the government. And the only thing you need to do to verify a transaction using fiat is to validate the authenticity of the instrument itself. The paper currency or the token, the coin, you need to verify that it's authentic. You don't need to know the identity of the party you're transacting with. But 90% of the world moves on bank-based money, bank-based accounts money. Money in the bank is an obligation of that bank. It's not an obligation of the central bank. It's an obligation of that individual banking institution. And to do a transaction in bank-based money requires identity of the parties to the transaction. It requires a third-party intermediary to validate that identity, validate that there's sufficient funds in the account to carry out the transaction, and then to validate the movement of those funds to the second party so that they receive the funds. It requires a whole bunch of intermediation, of identity, and therefore you've got latency, you've got cost, and you've got, by nature, an exclusionary system, because only those with identity and account sufficiency can use that system. That's what 90% of that money, makes the world go round. Well, 90% of that money going around the world requires identity, requires a bank account, it requires verification of identity.
So let me pause you there then. So it sounds to me like, to anticipate, we're talking about, you know, a native digital money that basically acts like cash for the internet, where you don't need to perform all of those steps and deal with all of the friction of, you know, a bank, a private sector bank in the traditional sense. Is that basically correct?
That's exactly right. From the dawn of human history until the Renaissance, money was only token-based. It was shells, beads, eventually it was metal coins. China introduced paper money, but it was all token-based. That is, you only needed to verify the token. But those token-based systems were only good for local usage. Why? Because they were expensive to move across. They were difficult to move out of the local area, and they were dangerous to move because you could be robbed. And in the Renaissance, it was found that what you could do is put that money on deposit with a local institution, and that institution would have a correspondent somewhere else that would vouch your credit. And our existing accounts-based system is all based upon that. Basically, it's gotten faster, it's gotten quicker, but it's still based upon that whole process of verifying identity, account sufficiency, et cetera, et cetera. What digital money allows us to do is go back to a token-based system, but solve for the local issue, because you can now move it around the globe in an instant, just like you can move a photograph or an MP3 file around the globe in a system. So the internet lets us solve for the local limitations of the old token-based money and go to a digital token-based money, and it's a tremendous revolution.
So that does sound like a great leap forward, and you identified 6 reasons why this is a good idea. And you also mentioned the context globally of how all this innovation is occurring. You've got this really active civil society that is experimenting and creating huge value with really important projects like Bitcoin. But you also have governments that don't share the same kinds of values as the US that similarly see the potential here. So of those 6 different things that you labeled, all of them seem pretty laudatory. There's one that I think is kind of problematic and may not jive with the values you're discussing, which is this idea of aggregating or collecting economic information. So obviously we know one of the reasons why the Chinese find this so interesting is because they now have more control over and more oversight and visibility into how money is moving through the economy, and that fits their social and political model. In the US, privacy is a fundamental right. In Canada, similarly, and freedom of expression is something that applies not only to speech but also to transactions, right? So now, obviously, you can't use money to do something illegal, but the act of spending money itself is not illegal. So how is it that we reconcile this right to privacy and this freedom of expression, these values that you and I hold dear, with the idea of creating a system like this? In other words, how is it that a government can stand up a system like a central bank can stand up a system like this and with all the benefits, but yet somehow have this carve out for those specific things?
So it's all about design choices. And that's why I feel it's so important that the development of a central bank digital currency must be a public-private initiative. The private sector and society have a lot to say about what social values they expect to be built in as design elements of a central bank digital currency. Just as society is looking at private, non-sovereign currencies now and making choices, just as we are doing that in social media. In Europe, they have a very heightened sensitivity toward commercial exploitation of data, and they've adopted a laudatory rule, the GDPR, which protects individual economic or individual privacy from commercial actors. But interestingly, it doesn't prevent exploitation or use of taking of that data by government. So they're sensitive about commercial use of their data. They're relatively relaxed about government. In North America, it's kind of the opposite. In North America, we're hypersensitive about governments taking our data, but we're relatively relaxed about data mining by social media companies and basically selling our data. And so it's time, I think, for society, look, you and I totally agree, the Internet of Value is going to fundamentally change financial services and money. The time is now for society to express its view as to what it expects, what are our social values when it comes to the privacy of our commercial transactions, whether that be privacy from exploitation by commercial actors, or whether that be privacy from exploitation of governments. Now, commercial actors, at least in the United States, do not have any limits on what they do with your data. But interestingly, the US government does. The Fourth Amendment to the US Constitution provides a basic privacy right. Now, how that is expressed in digital money, what the jurisprudence is around that, a lot of work needs to be done, but the root is there. And if we develop this right, there should be very good privacy protection. You could see a world, let's say, just posit a world where you've got a digital yuan, a digital euro, a digital dollar, and a digital commercial coin. The digital yuan, presumably, I think it's a safe presumption to know China is going to mine that data for social credit ratings and other activities. A digital euro would give protection against commercial exploitation of that data, but not government exploitation, at least as it's currently formulated on GDPR.
Yeah.
A commercial coin, let's say a universal commercial coin put out by, say, a social media platform, presumably that data would be available for mining. Only
by the company, but maybe not by the government, right? In that situation?
Not by the government, right, yeah. Right. Well, but we also know that the U.S. government today is actually outsourcing some of its surveillance to non-government actors in certain areas because the government is limited by doing it itself. And so the question would be, you'd have to ask the question as to whether if jurisprudence is properly developed, where your financial information is safest if it's run by the U.S. government, because the government's restricted by the Fourth Amendment, which would also prevent it from giving it to commercial actors. Now, we're a long way off. That is entirely academic speculation. But this is the stage we're at right now. Society needs to speak with a loud voice as to the commercial development of non-sovereign coins, as to the government development. The time is now to set those expectations. And my initiative, the Digital Dollar Project, takes a completely agnostic approach to non-sovereign development of non-sovereign stablecoins and other instruments. We believe that all that development work is only for the good. It's going to be helpful. But we do believe that the U.S. needs to be the U.S. official sector needs to be a leader in development of central bank digital currency innovations, if for no other reason, by to address this issue of privacy and what are society's expectations, and how do we get that design element right from the beginning.
I want to pick up on one thing you said, so that I agree with all that, about public-private partnerships. And I know that the Digital Dollar Project has a number of commercial partners such as Accenture, but there are other private initiatives underway that are looking to change money, right? So there are these things called stablecoins, which you alluded to. Now, the first stablecoin and the biggest stablecoin is one that I think maybe you wouldn't want to be the model for how a stablecoin should be in the long term. But since then, we've seen some really other interesting ones like USDC, which is US domiciled business. It's regulated. They have integrated with leading payments companies like Visa. The circulating supply now of USDC, I think, is around $18 billion from less than $1 billion last year. And I think it's pretty soon going to be the largest in the world. So isn't that an example of private enterprise getting stuff done? We don't ask governments to build social networks because private enterprises maybe can do that better. Now, I know it's a false equivalence. Money is very different. But is that the kind of initiative that you see helping to spur innovation, or could that even be the type of partnership that the government has in the same way that they rely on banks to manage the financial system? Are stablecoin issuers something that could help in the reinvention of money?
Absolutely, all of the above. nobody planned the development of the first wave of the internet. It played out, and society made choices, and I think that the same should happen here. And the first 150 years of the U.S., the greenback was not an exclusive instrument. You had many issuers of forms of money, and some of them traded, at slight discounts. Some of them traded heavy discounts, depending on, the issuer, the nature of what reserves they held, where they were located, what the strength of the local economy was, et cetera, et cetera. And it may be that you have a future environment where you have multiple stable coins trading, and the trust that society puts in them may have a role in where they trade. But at the end of the day, as linked as they may be to a government currency, they don't have the full faith and credit of the government. They still rely on some tie to some holding of currency.
Right.
What we're talking about with a central bank digital currency is something that is indistinguishable from a physical token. It enjoys the full faith and credit of the U.S. government. And there's a lot of reasons why central banks may choose to have something that enjoys the full faith and credit. One can argue that money is a public good, like an airport or like a railway is, or like a road is, or a highway, upon which commerce takes place, private commerce. And so I think there's many that might see a central bank currency as core economic infrastructure upon which the private sector would build. And I could imagine a central bank digital currency having layered on it a lot of private government services, whether they be securities settlement, whether they be programs that can program money, all of which can be developed by the private sector. So we don't envision a central bank digital currency as necessarily squeezing out private efforts, but we do view as if there is a lot of reasons why the U.S. government will want to consider having a central bank digital currency that enjoys full faith and credit as core economic infrastructure for all of the private sector initiatives built on top of it.
Yeah, interesting. You mentioned that the good old days or the bad old days, depending on your outlook, before the Civil War, when there were various bank-issued notes, right, that represented money. They called it the Wildcat days. But a lot of those...
even after the Civil War, it really wasn't until the early 20th century.
Yeah, I guess so.
You had national banks that were still issuing currency right up to the early 20th century.
Yeah, that's right, of course. You mentioned like notes would trade at a discount or a premium depending on who issued them, where and when. I have to think though that the reason for that was communications and information problems, right? In a world where information moves at the speed of light, quite literally, I can imagine a scenario where most stablecoin initiatives would not break their peg, right? Unless there was something really wrong, in which case.
Well, we've had recent of one stable coin that was said to be tethered to certain value pool, and information wasn't as perhaps as full or fulsome as one would like. And if you've got any bit of guesswork, that's always going to result in some degree of discount. So yep. You're right. But, even in a digital economy, there are still information asymmetries that could play on something that doesn't enjoy the absolute full faith and credit of the government.
Well, you've made a very compelling case for why the U.S. government needs to move quickly and do this, not only because it's good for America and the world, but also because it can radically improve the efficiency of the financial system. Now, and among other benefits, as you pointed out. Now, one of the things that people on this line, I bet, are very curious about is what has this all got to do with Bitcoin? People hear, Bitcoin, as you pointed out, for a decade, this has been this pioneering project that has captured all this value and is now being integrated by big companies and being held by investors as a store of value and so on and so forth. But do central bank digital currencies conflict with Bitcoin in any way? I have my own opinion on this, which I will volunteer after your answer, but I want to hear what your thoughts are as well.
So, as former chairman of the CFTC, I understand commodities and can recognize a commodity. And I think of Bitcoin in many ways as much more like a commodity than a currency. And commodities of value have existed alongside currencies, from the dawn of history, and people see them as stores of value alongside currency, and sometimes in certain economic conditions as superior stores of value to currencies. And so I could very much envision a world where you have central bank digital currency, where you have stable coins, and where you have digital commodities all existing. And choice is a good thing for society. It gives them protection against profligate governments that may destroy the value of currency. So I think Bitcoin is going to, its history, I don't know what its future will be like, but I think we'll always look back and realize, it was the big one that started us rethinking the notion of digital assets in a very big way. And I think it's proven its value heretofore quite magnificently.
Yeah, I couldn't agree with you more. And you don't want to volunteer, but I will. But I think Bitcoin also has a very bright future as well. Now, one of the things that people have been talking about a lot recently is the regulatory environment as it relates to Bitcoin. Now, you were in public life for many years. Before that, you were, an entrepreneur, a lawyer, and many other things. There was a lot of optimism with the change of the guard that there would be new leadership that would be more open to Bitcoin and to digital assets. Not to say that the last administration was hostile, but we know that, for example, Gary Gensler, who's taken over at the SEC, has previously taught a course on Bitcoin. And I know that you and he were at the CFTC. I'm not sure if you were there at the same time. So I know that you can only say certain things, but I'm just curious, what's your view on the temperature in Washington today as it relates to this asset class?
Sure. So I know Gary quite well, and I think he is a formidable appreciator of the change that we're going through, and I think he's going to bring a lot of very smart thinking. The combination of him and Hester Peirce, I think, is great promise for what might come out of the SEC. Here's what I'd say. No political party in the U.S. or indeed anywhere has a monopoly on a forward-leaning approach to innovation. Every party has those who are the early adapters and those who are the late adapters and a broad middle of middle adapters. And certainly over the last few years where I served in government, there were a number of people like myself and Brian Brooks and Daniel Gorfine at the CFTC and others who were very forward-leaning when it came to the Internet of Value. There were others who were much more skeptical and much more protective of the existing system and less open-minded toward some of this innovation. And the same is true in this administration, the current Biden administration as well. There are some who are very forward-leaning. I'd put Gary Gensler in that category, and others that are less so. And I think that's natural to any government. Here's what I would say: the real dividing line is not between Republicans, Democrats, conservatives, liberals. The real dividing line is generational. There's a real dividing line between, if I might say so, my generation and the generation that's coming up behind us. A generation that grew up in the internet era, that grew up with video games, that grew up with online commerce, that grew up with digital things of value like MP3 files and Snapchat and Facebook, intuitively get the reason to transfer money instantly. They don't get intermediation. They don't get time lags. They don't get branch banking. And so the real change is the generational change that's inevitable over the course of this coming decade. And so it's not a question of Republicans and Democrats. It's really a question of time marches on rapidly. And there's your generation that's coming up that's going to step into roles of leadership at agencies like my former agency and the SEC and the equivalents in Toronto and in elsewhere in Canada are going to bring that change with them. And that's why this is inevitable. This is not a question of if, it's just a question of time.
Yeah, I agree with you completely. And I think that there's a bigger discussion here to be had. I think people focus a lot on the regulation of crypto assets. And obviously that is important and consequential. But the bigger picture is this is a new technology era. We have this tool that allows us to rethink the biggest and most important industries in the world, such as financial services. And if you're in the US, you know that in the first era of the internet, you basically dominated. And there were reasons for that. The internet was started in the US. Most of the personal computers in the world were in the US. The only real VC industry at the time in the late 80s, early 90s was in Silicon Valley. All the biggest telecommunications firms were built there. And you also had a government that created the conditions for that to succeed, basically, as you described with digital dollars, as a public-private partnership, right? But this time it's different. We live in a world today where technology tools are way more ubiquitous. Smartphones, penetration is very high almost across the entire world, as is internet connectivity. Capital, there aren't the same kinds of barriers as there were before. Even blockchain itself is accelerating the flow of money and assets, and that's making it easier for companies to start anywhere in the world and to be decentralized thanks to telecommunications tools. So the point I'm making is that there's no guarantee that just because the US remains the technology powerhouse that it is and the largest economy in the world, that it will automatically lead in the same way that it did the first time. So the discussion that I see in government is not only about, well, how do we regulate a Bitcoin ETF or something like that? It's actually about what are the rules of the road, or the terms and conditions that will allow this industry to thrive here. And I'm not an American, I'm a Canadian, I'm based in Toronto. We benefit enormously from being a large trading partner and a close ally of the US. But I also see an opportunity for Canada to similarly be in a position where it can lead. And I think that there's some things that are built-in advantages that some countries have and others, but one choice that can be made is a political choice about whether or not you actually want to lead in this new industry. So my hope is that countries like the US and Canada move in that direction. And I think, to your point, this generational shift is a very good sign of that.
I couldn't agree with you more, Alex. I'm not sure the US is going to play the same dominant role that it plays in this innovation. And I'm not sure that necessarily that's a good thing or a needed thing. I think that a greater global coming together around this new technology is critically important. I do think, though, that the values that we talked about earlier, those democratic values, those society values, are critically important. And whether it's the U.S. that leads to make sure those values are integrated into the future of money, whether it's Canada, whether it's Europe, whichever democracy and society wants to stand for those values has got my full support. Because I think if we don't get those values right in the digital future of money, if money becomes a surveillance tool for governments around the world, whether they be one-party systems or so-called democracies, but are doing surveillance, then we've all lost as a society. I think we have to insist that the money we use be free of surveillance, whether it's commercial or government surveillance, that we enjoy economic privacy. Economic privacy, and I'm not talking about violating law enforcement. Economic privacy for lawful activity has to be one of society's demands in the digital future of money. Whoever the promoter, provider, sponsor of that digital money is, whether it's a government or whether that's free enterprise, economic privacy has got to be one of the essential components in that future. And if Canada wants to lead in that effort, you've got my 100% support.
Well, we appreciate that, of course. Any support from the U.S. is welcome. So I want to just pivot to a couple of other things. We've talked about CBDCs, central bank digital currencies, stablecoins, Bitcoin, and those are probably the most consequential areas of this space today. But we are seeing this emerging world of decentralized finance, DeFi. So the idea of DeFi, for those who are listening, basically, is that you can recreate certain aspects of the financial industry, things like borrowing and lending, payments, insurance, and so forth, using digital tools, basically smart contracts. So rather than having legal documents and intermediaries that have balances of money owed to who, all of this can basically exist in digital form. It's along the lines of the discussion we're having, which is that we have a digital medium for information in the internet that allows us to move photographs around on Instagram. We don't have a physical one sitting in the photograph bank. It's just digital. Now that we can do this with other financial industries. So this is an exciting area. It's an area that I pay a lot of attention to. I see a lot of talent from Wall Street moving into DeFi. I see a lot of capital flowing into DeFi. And I think that it shows a great deal of promise. Having said all of that, there seems to be a lot of crazy stuff happening in the DeFi world, and frankly, probably some bad behavior as well. So, if you were still in public life today, how would you address it? And if you don't want to answer it that way, what is your opinion of DeFi just generally?
Oh, I'm way excited about DeFi. It is, and it's as natural, it's as naturally occurring or naturally evolving as other phases of the internet. So I don't see it as something that's foreign or unusual. I see it as a natural evolution, and I think it has really exciting possibilities in financial services. Now, yes, there are some bad things happening, which happens, quite frankly, in every new innovation and every new technology, but it also happens in old technology. I was watching a crime movie the other night, and the payoff was a briefcase filled with dollar bills. It wasn't Bitcoin, it wasn't diamonds, it wasn't gold, it was dollars. And dollars are still used for a lot of criminal activity, and that doesn't make them illegitimate. Nor does it cast a bad light on the Federal Reserve. And diamonds are used for illicit purposes, and that doesn't cast a bad light on De Beers. There will always be criminality as long as there are human beings, and in part there'll always be regulators as long as there's criminality. But that's not a reason to try to slow down technological evolution. That's a reason for regulators to keep pace with it, not to try to slow it down.
Hear, hear. I couldn't agree with you more. So one thing, tying back to a conversation we had last time, and I think everyone on the line wasn't there for that, so I'll rehash it. I mentioned to you that I was reading the biography of Harry Truman that won the Pulitzer Prize, and one of the sections in the book was about how Truman was dealing with a Europe that was bankrupt and destroyed, and needed to muster the political will, along with George Marshall, the Secretary of State at the time, to basically underwrite the entire continent. And then that led to the Marshall Plan. And at the time, I remember reading the polling numbers, of Truman was polling at 85% or 90%. And there was this bipartisan consensus to spend billions of dollars on fixing up the enemy that had just killed hundreds of thousands of Americans and millions of Allied soldiers. And it was sort of like harking back to a time when that was possible. And I just finished reading the James A. Baker biography, The Man Who Ran Washington. I'm not sure if you've had a chance to read that one. And I was struck by this really similar parallel, which is that at the end of the Cold War, which ended more with sort of a fizzle than a bang, I guess, like World War II, James Baker and Bush went to Congress for $4 billion, which, on an inflation-adjusted basis was a tiny fraction of what the Marshall Plan was. And they couldn't get it. People expected there to be a peace dividend from the end of the Cold War. They didn't expect, to have to fund the Soviet Union's redevelopment. And it happened to be an election year, and Bush was polling really badly, and, the Congress was really bipartisan. Anyway, this is all to say, to do big and important things in government, not everyone needs to think it's a good idea or agree, but you need to have some level of consensus. And the political environment in the US today, still very partisan, obviously, but there is, I think, a renewed sense of hope that the Overton window, as they say, is open for things that are good for America that could get bipartisan support. So do you think that, and I think about the idea of a digital dollar as not something that the Federal Reserve quietly flips a switch on. It's something that needs to be legislated. This seems like a law that needs to be, agreed upon by elected officials. Do you think that's feasible in this kind of environment?
I do. I do. And I agree with you, Alex. Those are great examples of leadership and courage by those in power. And it's amazing what leadership and political courage can achieve. When the ends are pure and when there's goodwill exchanged amongst politically warring factions to bring them together. And I think humanity has good examples of that, as does American history. And unfortunately, it also has probably more examples of a lack of goodwill and a lack of leadership, and certainly a lack of political courage. And I think that if you can put those combination together of courage and leadership, anything's possible. I do think that, as I said before, society's been experimenting with money now for 10 years and showing the ability to make money relatively frictionless, relatively without latency, and relatively more inclusionary. Digital tokens are much more inclusionary than is an identity-based, account-based system. There's the promise with digital money of bringing more people into the financial system, more people actually into banking services. Everybody asks what could go wrong. Well, let's ask what could go right. Digital currency may allow more people to come into the financial system. And I think the emphasis that this administration brings on financial inclusion is a good starting point for a broader conversation as to whether we could bring both sides together and maybe develop central bank digital currency as a means to bring more people, maybe that don't have good identity, maybe that don't have traditionally access to financial services, into the financial service system. So I'm optimistic. I've always been optimistic. I'm optimistic in the role that democracies play. And I love that analogy of the Marshall Plan, because that was money well spent to make sure that most of Western Europe continue to enjoy human liberty, as opposed to living behind the Iron Curtain, where that liberty was squelched for several decades. And so I think if the democracies can show leadership, if democratic and free societies could insist on the economic privacy that's necessary to maintain a free society way of life, I think the future's quite bright for the future of money with this new innovation.
Yeah, I completely agree. Yeah, I mean, I don't want to compare, an initiative like this to rebuilding Europe, but in terms of its significance per se, but I do think it's something that fits into that kind of big idea, big initiative.
I do think it does, and it's not limited to just Europe. There's people around. In the last several generations, more people have risen out of poverty around the world than at any time since the dawn of history. And why has that been the case? I think part of it is because the global reserve currency has carried with it notions of free enterprise, of the rule of law, and of economic privacy for legal transactions. It's a part of it. And yeah. I think if we can ensure that the money used in the future enjoys those same privileges, then people around the world can continue to aspire to a better way of life wherever they live. And the opposite of that is true as well. If we in a sense yield the future of money to non-democratic notions of state surveillance and of social credit systems, then I think we're condemning perhaps a lot of the world's future population to those type of economic systems. And I think that would be unfortunate. I think we that have the privilege of living in democratic societies will have surrendered the responsibility that comes with the privileges we enjoy to make sure those democratic notions remain in the future of money.
Yeah. One thing that some people would say is that, the U.S. dollar has been good for a lot of people, and others would say maybe the U.S. dollar has too much influence in the economy. It's been the global reserve. The U.S. is 15% of the GDP, but it's 70% of global trade is in U.S. dollars, for example. But I think what's interesting about that is that you have now this emerging digital asset class of potentially CBDCs and stablecoins, and now Bitcoin, where, to your earlier point, if you feel the government is not acting in your interest, or is violating your privacy, or is destroying or deteriorating the value of the currency, whatever currency that is, you have an option. You have Bitcoin, as well as other stores of value that you mentioned. And I think that kind of innovation and choice is obviously very important. I want to turn to the audience because some great questions here. One of the questions is about banks themselves. So we're talking about disintermediation, and it sounds like in your vision for the future, central banks have an important role to play with the creation of digital money, and decentralized technologies like Bitcoin have an important role to play. Where do the financial intermediaries that today are so crucial to this whole system working, where do they fit into this vision?
So I think, so like any legacy industry, there will be challenges and there will also be opportunities. I think that the correspondent banking function of moving money around the world based upon identity recognition, account sufficiency recognition is going to be challenged by digital currency in the same way, Kodak's business of intermediating the process of taking a negative and turning it into a photograph was disintermediated by digital photography. I think the correspondent banking system correspondent banking as an industry is going to face challenges, but fractional banking, which is the traditional role of banks of taking many deposits and turning them into loans, is going to remain. Somebody that's got $10,000 that needs $40,000 to buy a $50,000 car, somebody that's got $100,000 that needs $300,000 to buy a $400,000 house, somebody with $1 million that wants $300,000 to start a $4 million business is still going to need banking, and banks are still going to have an important role. And here's the point. It may be that a digital currency may be an on-ramp for bringing more people into the banking system. We think about the detriments, but what about the positive aspects? What if people with digital currency on their mobile device are not collecting interest, find it very easy to move it into a banking institution to collect interest and have it insured that they don't? So it may be that digital currency becomes an on-ramp. And we've actually seen evidence of this with M-Pesa and other initiatives in Africa, where digital payments have served as an on-ramp into financial services. But that's one of the things that we want to test out with our digital dollar project pilots, to test out that theory. How will it affect banks? And some of the America's Main Street banks have been the first to sign on with us to test out these initiatives. So banks get it, that there's both challenges and opportunities here. What we need to do is do some real world piloting to see how those play out and get some real data as to what the impact of a CBDC would be on traditional banking systems.
Well, I agree with you in part. So if you've ever used a stable coin to move money around the world, you know that it's superior to sending a wire transfer. This is my opinion from doing it many times. And I have to wonder if, by creating these on-ramps into the world of digital assets, and I would include a central bank digital currency among them, if all of a sudden that becomes an on-ramp into applications in the DeFi space versus tying into the legacy banking world. The description that you just had of connecting lenders with borrowers is something that could be done in a smart contract over a protocol like Compound, for example. We're a long way from that, to be clear. Like, the balance sheet of Bank of America is hundreds of times larger than most of these protocols. But that's how all industries start. Amazon was 1,000th the size of Walmart, after a year or two, and now its market cap is 4 times as much, right? So I'm with you in the sense that I do think that—
I agree with you, Alex. I don't disagree with that at all. But if I'm a legacy bank, I have 2 choices. Either I can put my head in the sand and say, I'm just going to hang on as long as I can before my business disappears, or I'm going to get involved now to explore this so I can see if we can evolve with it. Because even those DeFi systems are going to need service providers. So how can we harness this technology and not try to be fearful of it and try to hide from it?
Well, I hope that you're right. I hope that leaders in banks are not, that this is not innovation theater, that they truly believe in embracing this technology. I think I've got good reason to harbor some skepticism on that. But I do think that in many cases it's genuine. I mean, Bank of New York Mellon, BNY Mellon, Chase, these other firms, they're launching crypto custody solutions as an example of how they're actually committed to commercial implementation. So a couple of other questions here from the audience. Do you think the implementation of central bank digital currencies creates competition amongst governments to want to create a currency with certain features that attract capital, so privacy rights, economic freedom, et cetera? Is that, in the same way you mentioned island nations like Singapore, they use this regulatory arbitrage, tax arbitrage to attract capital. Could something like that happen with money too?
Money has always competed against each other since the beginning of time. Sovereign money is competed against non-sovereign money, and sovereigns have competed against other sovereign money. And there's been different distinguishing characteristics that have, during different periods of time, had made one to be more preferable over another. But one of those characteristics has been technological capability as well. And so by modernizing the dollar, and that's what we argue should be considered in the United States, you're increasing its competitive capacity against another. But it would be, frankly, somewhat naive to believe that currencies don't compete against each other. They do. Yeah. And that's since the beginning of time, that always will be. And I think in the future, a currency that doesn't modernize is going to be at a disadvantage to others that do.
I would tend to agree with you on that as well. So a lot of questions here about privacy. So I see government digital currency being big brother, tracking everything you buy as well as taxing every transaction. What is your thought and opinion on that? And then the corollary to this is what AML/terrorist measures need to be taken with respect to these kinds of things. So two sides of the coin, right? And I think it goes down to that idea of design features and what are the principles that go into it.
Look, I agree. And quite frankly, if a free society allows the government to operate a currency that's a surveillance tool for government, then shame on that society. I mean, if we do believe in democracy, then it's our responsibility to determine what the design features of that currency are. And that's why, quite frankly, I think it's very important that we do not suppress non-sovereign currencies, because in a sense, they put a check on government. But on the other hand, a government currency with property privacy rights in it puts a check on non-sovereign currencies that may seek to exploit your data. So in a competing system of non-sovereign and sovereigns, and one sovereign currency competing against another, you've got the best chance of preserving privacy than anything else. And I have often said that if the United States gets privacy right in the dollar, it's the killer app. If the United States gets privacy rights, a digital dollar will be the killer app, because you wouldn't have commercial exploitation. And if we get it right with Fourth Amendment protections against government surveillance. Now, we could get it very, very wrong. So the jury is out. That's why I've started a foundation. I'm funding it myself. I'm looking to advocate, because the privacy issue is so important. And if we just sit back and assume it's going to take care of itself, it's a mistake. We need to make sure privacy is built in as an imperative from day one into digital money.
And of course, there will be more and more private sector initiatives. Facebook's Libra seems to have lowered its expectations of what it wants to achieve. But I think, there's more of that to come, certainly. And of course, as we've talked about, there's this alternative. Now, whether you think of Bitcoin as a commodity like gold or potentially money, some new form of asset, it is a way to move and store value that doesn't rely on either a company or a government. And I frankly see a world where all three rub up against each other. I don't think it'll always be peaceful, but I do see a scenario where they all exist and they all certainly grow in significance as we enter into this new age of the financial services industry. It's 3 o'clock Eastern Standard Time, which marks the end of the hour. I think it's fair to say that we could have continued this discussion for a lot longer. If you'd like to share this, or if you want to watch it again, the video of this discussion will be available on our website. And if you'd like to learn more, of course, you can check it out, digital.ninepoint.com. This concludes Crypto Talks for today. I'd like to once again thank our guest, Chris Giancarlo, for a lucid, thought-provoking, wide-ranging discussion on all manner of things. And I think, Chris, before we go, I want to make sure everyone knows where to learn more information. So why don't you just tell the audience quickly where they can find out about the Digital Dollar Project and everything else you're up to. DigitalDollarProject.org is our website. Everything we do is posted there. I should mention that our technology partner is Accenture. A minute ago, I said
I'm funding this. I'm certainly, the Digital Dollar Foundation is my creation along with two partners, but Accenture is funding these pilot projects and deserves a huge shout out for their work in doing that. So anyway, digitaldollarproject.org.
Great. Thanks again, everyone, for joining us. Chris, it's been a pleasure. You look terrific in that suit and tie. It's good to see, at least in some places, people are getting back to normal.
Believe it or not, it's been a long time since I've had a suit and tie on, and it feels good for a change.
Yeah,
my T-shirts, I get a little warm.
A few weeks ago, I polished all my shoes just to make sure they were still there. Anyway, all right. Take care, everybody, and have a great rest of your day.